per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in receiving my personal trades on a daily basis by joining my Signal team, please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small fee of $29.99. Let's have a look at the Nasdaq100. And the Nasdaq100 is playing into my hands very nicely here. I've been saying for the past couple of weeks, and I've been using YouTube as a platform to come on here and say that I was really fearful for us to give up the majority of July's gains and for us to go and retest the lows. And I still stick by that bias. Under the surface, we're starting to see big tech companies, the likes of Nvidia, and now today just Micron has come out and has basically warned for the outlook going into the winter months. So I'm very bearish here. I think that as time goes on, we're going to start to hear this from the likes of Microsoft, from Apple, from Google. We already have to some extent heard it from the likes of Facebook and Google, but I think Amazon as well will be one of the last ones to fall. And once these companies start to fall one by one, that's what's going to really increase the pressure to the downside here. One real negative technical movement that's happened during today's trading session is that we've now broken below Friday's swing low. So that's very bearish, and that now opens up a trapdoor to the 50-day EMA, believe it or not, which is all the way down at 12,500. So what does this mean now going forward? It means that from where I'm sitting, that opens up a nice 4% move towards the downside. One thing to definitely be wary of, though, guys, is tomorrow, which is Wednesday, of course, we have the inflation number coming out. Now, many retail traders will get confused by this, so I want to make this clear. Most retail traders are going to be looking at their economic calendars going into tomorrow's trading session, looking out for the headline. Now, the headline expectation has come down from last month. Remember, last month, inflation reading was 9.1%, which was a new 40-year high. And of course, now I think it's now down to 8.6% or something like that. Don't quote me on that. But the expectation has come down. Now, it's very important to understand is that the Fed focuses on core inflation, not the inflation headline. And core inflation has actually gone up in expectations. So the Fed are basically saying that they're expecting the core inflation to go higher. And this is because the housing and rental markets, at this moment in time, to rent a home or an apartment or to buy a house, it is at an all-time high. And that represents a very large portion of the core inflation. Yes, we've seen oil prices come down, metals, wood, which is fantastic, but that's only one piece of the puzzle. So going into tomorrow's trading session, we may get the headline inflation number that comes in lower than expected, which would be great, but it's the core CPI that most of the institutional traders, the bankers, the big money movers will be focusing on. So you may see a knee-jerk reaction if that core inflation number does come in a lot hotter than expected. You may see a nice pop towards the upside because the headline might beat, but then ultimately you might see that follow-through movement towards the downside. So I personally believe the 50-day EMA is in play here. I don't think we've got enough fundamental reasons here to rally towards the upside. Valuations have become stretched after July's humongous rally towards the upside. And as I've been saying for the past couple of weeks since we broke above the 50-day EMA, everything in this current movement that we've seen over the past month tells me that this is just another bear market rally.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.